Good day, everyone. All right, give me a minute. I'm going to share out the live stream link on Twitter and the Discord. And we'll dive into the charts here. This Bitcoin's testing a important level with another level slightly below our current wick. I hope everyone is doing well. All right. Well, let's get a frame of reference for where price is currently. Yesterday's live stream, I went over this idea of price coming down and taking this weekly candle low and wicking through it, reclaiming it for a nice long setup. There's a bit of a region down here in terms of important levels. And one is we have our major 618 of the retracement still below us at 65K. And there's this wick here on the weekly candle low. So I think this needs to be considered as still an important region. I am long. And I'll kind of talk about how I'm approaching this and why I'm long here. But why I would be willing to cut my long if this wick is lost and reassess if it's reclaimed and just try this as two longs. Instead of trying to guess exactly where the low is coming in here, I can explain the logic to get long on the reclaim of this weekly candle low. We have it marked out here, targeting up towards 77K, while still being aware of this idea of coming in, forming a local range here, and then coming and running this low one more time for liquidity. I think that's still an important idea. But for me, it makes sense to look to trade this potentially twice, but still waiting for a sign of strength because a breakdown is always possible. And just being open to being taking a stop loss, reassessing if we reclaim this level. So the reason I'm long now is just based off of some order flow ideas. Again, it's just a game of probabilities, which is, let me pull up the order flow here. So this big wick that took the weekly candle low, 152 million volume. This is here on IBIT, 55 million negative delta. So this is probably one of our biggest negative delta wicks that we've seen in quite a while. And it is giving us a major bullish divergence between price and CVD. So certainly an important region. And price really likes to put in its major highs and lows, not always, but around these high volume, high delta wicks. So we can see here this really high volume wick here running that liquidity. It's not unusual for those to hold, but they can get run again. So here's an example of this initial move down was the big high volume wick. We rallied and then we came and tapped that low again. So I am looking for something like that. But you also often see those major high volume wicks hold as the key low, right? High volume wicks on the upside and the downside. But we are forming a little bit of a range here. So I think this is the critical idea, which is price holding up this weekly candle low and watching for this maybe move down through into this liquidity, which we might get maybe even on the live stream. I want to cover a few other things, but I think we should just kind of keep an eye on Bitcoin as we test some of this local structure. All my longs here, I'm going to be targeting 77K. And I'll say this, I'm talking about what I'm doing and why. And the whole reason is for an educational purpose. I want to be able to explain my thought process and my decision-making process on a live chart, right? So these are the trades I'm taking. I'm always using risk management. You never want to be risking, in my view, more than 1 to 2% of your account on a single stop loss. So I'm perfectly happy to be invalidated and to be wrong on long ideas from here, in which case I'll just take a stop. Someone says, no, we're safe, you're live streaming, which I think is a reference to the fact that with few exceptions, if I get live, price just goes sideways and doesn't do anything. Yeah, so I do want to talk about a couple other ideas, not just on Bitcoin, but I thought it'd be interesting to get live here while we're testing some of this local structure. The other reason is after this wick, and again, it's just a game of probabilities, of course, is we do see some signs of bullish absorption forming locally here with some aggressive selling getting absorbed. So instead of trying to fade this high volume wick, and even though I'd like to see this idea of coming down and running the wick as a really clean spring, I guess, for a move up, I don't think I'm completely willing just to not put on any long risk here in the case that doesn't happen. So, you know, it'd be something like this. It's kind of like a BART type move on a lower time frame. And frankly, I think that this idea has to be considered as a possibility all throughout this range. We could come and retest these lows and then have that run. So this is a critical idea I'm watching. And a sign of strength here is important because there's no such thing as a certainty in the charts. And if we start breaking this down, we could just go lower. And I don't want to be sitting in longs if there's no signs of strength. But we'll see how things kind of hold up here as we test some of this local support. Someone says, what do you think about adding to your trade until it's invalidated? Well, it just depends how you're structuring your trade. I mean, if your plan is to add to it until it's invalidated and you're still maintaining your risk management in adding, then there's nothing wrong with that as a concept. I mean, if you're, say, for example, taking a partial position here with the idea of, well, I'll scale into my long. If we rally from here, I have some exposure. And if we get this, I'll scale into it with an average entry. But if you're just adding more and more risk without taking into account the idea that the trade might not work, then it can be kind of dangerous to be adding to a position as price goes lower and lower if that wasn't part of your plan when you were sizing into the trade. I have no idea. Somebody says, do you expect a reaction in the next minutes? I don't really like to think that way. I have the broader idea here. I may have some reasons to be getting long, but trying to guess in my head that a big reaction is coming in the next minute or two, that's not really how I invalidate these types of trades. But I really think it shouldn't be ignored. You have this big 50 million negative delta, $152 million wick here. You know, this used to be a really common theme for Bitcoin when it put in significant lows, which was the initial wick, a little range, and then run the wick one more time. But I'd say more recently, maybe over the last month, for example, all of these lows just one wick, strong reaction, one wick, strong reaction, holding up the higher low, local retest. After these big liquidity grabs, we haven't been seeing that idea form as much, which holding up the higher low, where we used to see that quite a bit in the charts. Something like this, right? You have the initial wick, a little range, and you just come and tap that low before the continuation. Even this, right? You have the initial wick, come and just barely run that low, continuation. Used to be quite common. Not always. It's not always how the bottom's formed, but again, it's just something like this, a quick wick through the level. So always keeping an eye out for that on Bitcoin, especially when there's a little bit of ranging forming around the level. I would just say that there are two key ideas here. One being this weekly candle, sweeping it and reclaiming it, and the other being we have some structure here that we could come and retest with a major fib level between 65,000, 64,600. Yeah, I mean, so I'm going to read some questions here, just to respond to some of the thoughts. Someone says, can we add to alts here, or long alts here? Well, I don't know. It depends on the alt you're trading, and if you have a technical thesis for it and invalidation. I kind of made a video on this, or I did make a video on this not too long ago and just posted on Twitter maybe an hour ago, which is the correlation between Bitcoin and alts. Because I had shared some ideas on FTM that look quite bearish. And I got a couple comments saying, like, you know, along the lines of, oh, you used to have good analysis, but this makes no sense. You're looking for lower on FTM, but higher on Bitcoin. Well, first we need to talk about the time frames of that. I'm looking for, so let's just look at the Bitcoin chart. I'm looking for higher here on Bitcoin, 77K, and then a move down to the 50K region. So obviously that's not going to play out in one day. But just this idea that the alts and Bitcoin are so correlated that the idea that Bitcoin could make a new high, retrace to 50K, and FTM could come down back into this 10-cent region is so ridiculous. But of course, if you look at the charts, here we have this big rally on FTM correlated to a Bitcoin rally. And as Bitcoin just goes higher and higher, this is back in the early 2023, FTM just sells off 80%. And so if you just believe that, and we got a similar thing here, I don't know what just happened to that chart. FTM put in its all-time high, while Bitcoin was putting in a major low. And then Bitcoin rallies in this range, kind of ranges, rallies, puts in a new high, higher lows, and we see a 70% sell-off straight down on FTM in the same time frame. My only point there would be that this idea that it's like this rally here, this is where Bitcoin was going higher and FTM sold off 75%. This idea that Bitcoin can't do this, well, FTM does this, it's just not, it's not logical based on how these charts have interacted. Not saying that FTM will go down, just the idea that it couldn't go down, while Bitcoin essentially makes a new high, goes sideways, has a big, deeper retracement, say, over the next few weeks. So anyways, just pointing that out, that just because Bitcoin may make a new high, in relation to your question, can I buy alts here? I mean, alts have their own charts, so still want to be looking to structure those trades technically. So let me just read a few more questions. Well, someone's saying what needs to happen to invalidate this idea. Well, I still just look at this as a bit of a region, and I'm still going to be managing my trades within the context of this region. But if we start breaking this down, this probably being the critical structure of the range, I wouldn't mind if we came down and retested this low into this level. But I'd be looking for some signs of strength coming out of this level. If we just start breaking that down, then I think some much more bearish scenarios locally here are on the table for sure. And maybe even taking that 60K low. But I think there's, some sense in being attentive to what happens here locally, even as we retest this weekly candle low, because that's certainly a critical idea that you'd want to see price holding up locally. Otherwise, we could come run these lows too, but otherwise looking for this move. And I may have to execute a position if we come and take these lows. On yesterday's live stream, I'd mentioned this as a potential idea for an ETH long. Somebody's asking about ETH. That if Bitcoin gets the move down to this level, coming down and retesting these lows, it's kind of an interesting idea on ETH, which we're quite near and might get now. I think we should take a look at order flow here and really open to this possibility of a quick move to this low into the 618 below. So let's keep an eye on Bitcoin for a minute. Someone's asking about AVAX. Yeah, I mentioned on the live stream yesterday that I've had these levels for a few weeks on AVAX. They're coming in, taking these lows, reclaiming them, or coming in and taking this pivot low into the 786 around $44. Could be interesting. So AVAX around a really important level as well. So a member saying, Lucky, be honest, you're able to hold up price by yourself, help us out. Well, frankly, I would actually kind of like this to happen. I would like to see price run into this key level and have that strong spring rather than ranging, or just break down with no trigger. Either one of those is totally fine by me. In some sense, the most annoying price action is where you come into a key level and you get a really clean trigger and you get a really nice reaction, but then the level just breaks down anyways. But again, it'll be interesting to see what happens here. We are forming bullish divergences locally that may or may not hold up here as some of these candles close. Little 2 million negative delta here, 2.3, 3.1. A little bit of risk coming in here. Some shorts open up, but nothing major here. Seeing a couple requests for like altcoins and stuff. I'm just going to be paying attention to Bitcoin here locally, because we obviously know that a move like this could come very quickly as well, right? And a reaction could come very quickly as well. It's kind of important to pay attention to what's happening here if we do get a move down. And the reality is, you know, with any trade you take, whether it feels this way or not, sometimes it can feel like you know what's going to happen when you take a trade and it works. And sometimes it feels like you thought you knew what was going to happen and then you were wrong for whatever reason. But you never know what's going to happen. We don't know if price is going to bounce here. We don't know if it's going to go to 77K. All you can do is trade an idea with reasonable expectations, reasonable invalidation, and reasonable risk. Just make a series of reasonable decisions. But very open to this idea of price coming down and running these lows if we're not holding up this weekly candle low. New York opens 4 hours. So here on the 4-hour chart, might look something like this. But again, some aggressive selling coming in here, and there's just local bullish absorption. So the higher volume wick still may hold as a local low. or major low rather. We'll just see here. Price grinding down, more selling coming in. Be interesting to see a bigger position come in locally. Like for example, when we were ranging here, first retesting that weekly candle low, we did have a $5.2 million long open here, risk coming into the market, causing a little bit of a local bearish divergence in order flow, and we did see that position clearly being held down, wrecked. Be nice to see a much bigger short position here open and get absorbed. Maybe a little bit more clarity, but we can just see here there is some absorption forming as we just range here. So to me this leans locally more bullish than it does bearish, but just understanding we have some higher time frame critical ideas here. Someone's asking, for those just joining, what are we looking at the moment? So basically, yesterday's live stream was looking for a move down into this weekly candle low. We're testing this region. There is a region here, which is one, just sweeping that liquidity, two, major fib here, a little bit of structure. Just another weekly candle here. So just seeing how price is reacting after making this initial low. Now, yesterday I talked about, yesterday's live stream, I was, I think, live in this region of the chart. I did say that there's some ideas of just longing any little wick and sweep through this range low. And I did take that long yesterday and just closed it up here into the middle of the range. So I just talked about that idea that even though the targets here is coming and sweeping this weekly candle low for swing longs up to 77K, there's probably just plenty of sense in trading this as a range still, and you have a nice tight invalidation set up there into the middle of the range. So this was just last night before I went to sleep, keeping long open while we test the range lows, targeting up to the middle of the range. I pulled the risk off the trade when I went to bed there, just looking for that lower high. Then I woke up to this. Do I have any EXO web version order flow templates or YouTube vids with how to set up EXO charts for premium Discord members? I've definitely gone through it and I've shared a lot of these templates in the Discord. I don't remember how the formatting works between the web version and the desktop version. Like if you need a different if the templates need to be shared differently. I think eyes on here, as we are very likely going to take that low. Pull up the order flow here. 24 million volume there as we retest the low. 5.6 million negative delta. Slight front run. But need to be really wary of the quick move through the low and the quick reversal, or just a breakdown. But if I take a long here off that sweep and reclaim, I'm always taking a trade with a stop loss, just taking reasonable risk. Perfectly fine to take a stop loss. Ooh, 9.1 million delta there. It's always possible that we don't take the wick, but no reason to assume we're not going to right now, I don't think. It's a lot of delta at the lows. Definitely seeing a reaction here off of all that negative delta. I might end up just carrying the initial long here. Wouldn't have been surprised to see that wick taken, but that 9 million negative delta at the lows being held up. We might be in a scenario here. This could be the spring. But we might be in a scenario here where we just end up chopping around and ranging around this structure for a little while. Still not flipping. Like, let's just go to the trading view chart here for a second. There's no reason to panic, no reason to make any rash decisions. I'm definitely not shorting this. I mean, if we nuke, that's perfectly fine. But price is grinding down here, low time frame. And without breaking out of this structure, all of this is still something to keep an eye on. If we break out here, these lows probably still have to be considered. That's why I'd actually just rather take them now. It makes them it less likely, in my view, that we continue ranging here locally. I'd rather just run these lows and have a nice clean reaction off of them. Sure does look likely that we're going to tap that level. I think this is the first time in a long time we've been live while something critical. Well, we did at some of the breaks of all-time highs, because I basically got live like 3 times a day. Anytime price cut near all-time highs, just for the novelty of watching order flow as price came into an all-time high. But it's very rare that we're actually engaging with some critical ideas while I'm on a live stream. Yeah, an initial reaction there, for sure, off that 9 million delta. But locally, price is just still kind of grinding down here. And the reason I would just prefer to take this, like I said, is because this is such an important technical level. Basically, anything that happens here until this wick is swept, you still just have to be aware of price coming in running this level. Even if we come up and push here, we could break back into the range. And the sooner we take this wick, the less probable it becomes that price comes and revisits this low again, if we have that nice clean reaction. And I know this might seem strange to people, that I would have a long that gets invalidated or closed if we lose this wick, with the plan of just opening another long if we reclaim it. And the reason is I don't know that we'll bounce, right? So if we just nuke, well, I need to cut this long that I'm in, and I can always just reassess and reopen on a clean reaction, right? But I don't want to assume there's going to be a bounce and just sit in a long while we break down. So my plan is simply to trade this level twice if I have to. One being this wick holding as one idea, the other being it being swept and reclaimed. Might not get taken. At least not here. Starting to reclaim some structure, have another nice high volume, high delta wick. Sort of just a double bottom. Start seeing if some of this starts breaking out. But yeah, it can be, you know, you can get into a situation where, let's say, for example, your idea was to long a sweep of this weekly candle low, and that's your idea from up there, and long on a reclaim. But so you take the long, and your invalidation really should be under the low, right? That would be the technical invalidation. But you don't want to get into this weird situation where you take one long, you have a plan, and then this starts happening and you think, oh, the wick's probably going to get taken, so I'll close my long before the wick gets taken. And then this starts happening, and then you take a partial stop loss right before your full stop loss, where you wouldn't have taken one anyways. Then you end up chasing a new long. And then this happens, and you do the same thing, and this happens, and suddenly you've taken 4 or 5 stops trading one idea. So I'd rather just confine this to 2 ideas. 1, the wick holding. 2, a sweep of the wick. And not having to re-chase the trade as price ranges here. But these low time frame descending structures and ascending structures are quite nice as just local ideas for signs of strength and weakness. Price likes to carry on these grinding trending structures on the low time frame quite often. It'd also be kind of interesting just to sweep this wick on the live stream, just to get an example of order flow, like those strong liquidity grab moves. Again, it's not looking so likely that's going to happen here, but that just means that until price has a very strong move out of this region of the chart, basically have to be open to this idea of these lows getting taken. I'd say this is a local sign of strength. So we could come and take these highs, retest this level. But until price starts breaking out and claiming all of this, I think this level is going to remain important. Someone's saying short to lower. I mean, if you have a thesis and a plan to short here, I'd say just follow your plan. I personally just would never short this in a bajillion years. Just, you know, not the place I would like to be looking for my shorts. Kind of just a nice little double bottom idea here. Let's just see what happens as we start breaking out some of this local descending structure, if we do at all. And then maybe and I am long. I did think I was about to take a stop there and then have to reevaluate if I was going to get back long there, but maybe not. Someone's saying, does it make sense if it took the low on Binance? I haven't looked at all the different exchanges charts. You said 65.8. It looks like Bybit's low came in a little lower initially, 65.5. And so obviously if Binance's low was a little higher and then we came and ran that low just now on Binance, that could be relevant. But I haven't looked at all these different exchanges. So maybe the idea would just be that there were some inefficiencies there between the exchanges. Bybit took more of that liquidity. It ran deeper than some of the other big exchanges on the initial wick. And the retest for Bybit was the equivalent of running that liquidity for the first time on some of the other exchanges. Someone said, or the same person says, yes, that is the case. The low was higher. Someone said took the low on Coinbase as well. Yeah, so everybody, I'm assuming, charts on different pairings and exchanges. And that is something to consider, that Bybit, it's very possible Bybit's low just came in, like I said, much lower than other exchanges. And so if we looked at every other chart here, their lows came in here and they all just swept their low. And that springs in action. It'd be kind of interesting to see what happens here. And I know it can seem, I don't even know if the correct word is confusing or frustrating, but just the reality that I can be willing to take trades at a level while still being very uncertain about what is specifically going to happen, or if the idea is even going to work. And my approach to the market is just never assume you know what's going to happen. Just trade around the reality that all these ideas are probabilistic. I'm going to look at some of these other exchanges quickly. So yeah, probably just depends on the pairing. Is it perpetual? Is it spot? Coinbase, yeah, put in an initial low and then just took that low. The BTC, USDT, kind of a double low on there. Yeah, I mean, it looks like it's all generally the same, but that maybe IBIT did have a bit of a deeper wick there initially. But like I said, any long I'm taking here, it's not something that I'm looking, although I'm going to be wary of retesting these range lows and then coming and taking this low again. These are all longs I'm willing to hold up into the 77K target. That's why I'm taking the time to find the longs here. That's what makes the these trades so compelling from a risk reward standpoint, and even the idea of trading it twice. If we come and run these lows, this is all very reasonable to me. Getting 13 to 1, 11 to 1, 12 to 1 on my risk. And of course, I'll be looking for opportunities to add to these positions in the coming days if we do start exhibiting signs of strength here. There's more structure forms. Now, obviously there's heavy selling coming in here, and that shouldn't be surprising. I mean, it's the same reason why you see heavy buying come up at the highs. People are bearish, people are scared, people, for whatever reason, whether their plan might have been they wanted to long every dip, but as soon as a dip comes, but a lot of the selling volume is also just going to be people getting liquidated and stopped out of longs from up here, right? So people are opening long positions, have that quick move down and through everybody's liquidations and stop losses, and people aren't necessarily choosing to sell here. They're being forced to sell via a long position. Getting stopped out from higher. Again, we have this descending structure still kind of holding up here locally, but I'm starting to think it's quite unlikely that we, over the next hour even, that we take these lows. So we'll see how this kind of local descending structure plays out. If we get a quick rejection here, I'll sit live until that resolves, but probably more likely to range and potentially take these highs instead of having a quick move to the downside. But I'm not basing any trading decision off of that. I'm just basing my decision to stay live or not off of that. I do want to look at the IBIT order flow really quickly. not as much selling as I would have thought here. We have had a lot of long positions selling off throughout this range. A lot of aggressive selling, rather. But locally here, we had a big gap down about an hour and a half ago. No heavy selling here, which is kind of interesting. Certainly a lot of liquidity at this low though, like 50 million negative delta. I want to say that the last time we had, like even these wicks, this was 47 million negative delta, 94 million volume. Like this was 25 million negative delta. This might be actually one of our highest negative delta wicks in the last month from memory. I think there's 13 million. I think this one here, the 106 million volume, 20 million negative delta, 224 million volume, 18 million delta. This was a pretty major run on liquidity. This was our biggest one. 224 million volume, 29 million negative delta, 27 million negative delta, 36, 20, 30. Yeah, I don't even think we've seen, probably in the last few months, I don't actually think we've seen a 50 million negative delta 5-minute candle. So certainly a lot of liquidity built up here. Someone's saying explain negative delta. I do feel like I have to do this on every live stream. I have tons of educational content on it. Part of me just doesn't want to necessarily get in this loop of explaining some of the basic concepts of order flow every time I get live. I think better just there's to go through. Yeah, it's all good. No need to apologize. I mean, I often don't mind explaining it. It's just I realize so many people show up for every live stream. So many are members, have gone through all those concepts. So, and I have educational material on it. So I think that's probably the way to go. So again, we are still reacting to this descending structure here. Like I said, these, like say you're scalping, for example, these low time frame structures, trend lines are just can be very clean. I think we probably have to go to an even lower time frame structure here. And shouldn't be ignored because this is grinding down price action, lower high, lower high, lower high into a descending trend line. Of course, liquidity builds up around these trend lines, and a lot of people, as they become more established or higher time frame, will start looking at them, maybe try to sell into it or short into it, and then they pop. But yeah, locally on the 1 minute chart, price coming back down, retesting this old low. There's that 618 here. Still kind of just potentially some technical ranging price action. If we break down here, I'm gonna stay live, and we'll look for this sweep down here. If we keep ranging and push up into this trend line high, then I might just end the stream. But I think it would be interesting to be live when this level is tapped, if it is tapped. So I'll stay live while we're still have some reasonable ideas that we could come down into these lows in the immediate future. And I explained in the Discord today that my plan here was in fact just to trade, let me get this off, to trade this twice. To trade it around the initial reaction of this wick, and then just be willing to trade it again if we come and run this important level down here. The sign of strength. And a clean reaction. We'll keep some of this local structure intact just for some frame of reference. But again, this is local support. So I'm not saying that this is going to be the low before a big rally. It's just, here on the 5-minute chart, we could be sitting here for another 2 hours without anything specifically interesting happening. But if we start breaking this down, I'll stay live. Kind of curious if ETH just took its low here. So many scribbles from last live stream. And ETH kind of in a similar descending structure here. I mean, this looks quite interesting on ETH. Could also look for the descending structure to break as well as a sign of strength. So say price keeps grinding down and wait for something like that. Could be a clean, cleaner entry trigger if price is just chopping around under this trend line. A setup that looks like this. Someone said, is it concerning that lows were taken on some charts, but we have such a weak buyback reaction? Well, it's not concerning to me because I'd actually prefer these lows to get taken. So I don't know if concerning would be the right word. If your primary concern is price going lower, like you're in a long and you'd be concerned if price went lower, then yeah, I'd be concerned. But I'm not concerned about price going lower. I'd actually kind of prefer this to happen. The other thing is, like, say we get this quick move to the downside here and the quick reaction, because I mean we've obviously seen some of these wicks and reversals come so quickly, like within the span of a minute or 30 seconds, prices come straight down and straight back up. There were long opportunities, say for example on this wick here, well after this wick came in. So you don't have to try to long the bottom of the wick. You can wait for structure to form. If you don't have kind of that confidence to manage your risk in that situation, like a quick wick comes and looking for a long on the reaction with a stop in place, maybe smaller size and maybe add to it. But anyways, I'm not worried about longing those reactions. Looking at order flow, I've traded probably thousands of them. Some work, some don't. But you definitely want to be prepared to cut those positions if there's no immediate follow through. Yeah, so this video is kind of more, instead of an analysis video, it's kind of just turning more into, let's see how price behaves at a key level that I'd personally be interested in trading around. But again, if you're not an experienced trader and you don't know what I'm talking about, nothing makes sense, don't try to trade the trades I'm taking. You know, use this as an opportunity to learn, because this might just end up in two stop losses for me, which I'm fine with. I've said this many times, and it's true, and I've said it in different ways, but as a trader, your profitability doesn't come from your analysis. Your analysis is part of your system, but over a set of many trades, without proper risk management, it's very hard to be profitable over the long run. If all it takes is one or two trades going wrong and you lose everything, then it really doesn't matter what system you're trading. Ooh. Let's move this alert up, because there's some chance I might be ending this live stream soon if we don't start breaking down this idea. I would like to have that alert trigger for me as we come into these lows rather than after the low's taken. But yeah, like the person who asked if I would be concerned, like a weak buyback. I mean, really, I would just be concerned about two things, which I pointed out up here even today in the Discord, is that, yes, we have this high volume, high delta wick, and again, defining concerned as price going lower, but we have this major level still below us that we front ran, and even here, we're just grinding down on a descending structure. So, you know, if this isn't breaking, this kind of looks more bearish locally and makes lower seem more likely than not. So for example, this is many hours ago. I don't even know how many hours ago. I gave this example here, right, in the Discord, saying keeping an eye on retest here or sweep of the wick. So we have this idea of the range forming, the retest, you know, maybe just range here, and then come down and sweep this wick, because we have the major GP said still need to be aware that we have a GP below that hasn't been tapped. So my idea here is probably just going to trade around the retest and the sweep, willing to put on a bit of risk on both. So I made a little video explaining My idea is just to say, hey, there's kind of two ideas very close to each other, and it's probably a reasonable idea to get long on either, so I'll just trade them both. And that initial update I just showed was back here, right? This idea of we have the retest, but maybe we form a local range, and then we come and run that wick, which is looking more and more likely. That's the scenario we're getting. And this could even result in a much bigger move down, but we'll find out soon, maybe. Yeah, of course you can. Someone said, can you trade profitable without order flow, etc.? Of course. Plenty of people trade without order flow. So Charlotte's asking, what kind of percentage risk do you advise per trade to those with small accounts like 5K, but able to deposit monthly a couple $100? Is 5% okay? Well, I'm going to answer this question with a few answers. One being, you can risk whatever you want, like whatever you want to risk, for whatever reasons you want to risk it. That's up to you. But in my view, the size of your account is irrelevant. So, because here's how I would just reframe how I perceive this question. The idea being that, hey, I want to make a lot of money trading. How can I make a lot of money trading if I have a small trading account of, say, $5,000? In order to make a lot of money, don't I need to just risk more? But then, now let's just, do you think that somebody with a big trading account, a professional trader, let's say they're trading a $10 million account. Do you think that the reason that they don't risk more is because they don't want to make a lot of money? So the idea is, if you're risking 1% of your trading account on this idea, let's say, and you have a $5,000 account or a $1 million account or a $10 million account, the reason you're risking 1% as a professional trader wouldn't be because you don't care about making money anymore. It's because that risk profile is actually part of your drawdown control. And it doesn't change it's just, if you base it as a percentage of your account, it doesn't matter to the size of your account. And so I have some videos in the Lucky Apes Trading Floor Discord that go through like the math of that. So for example, you take enough trades, let's just say you have a system with a 50-50 win rate, but you're getting, 4 to 1 on your risk. So you win 50%, you lose 50%, but you make 4 times more on your winners. Let's just give this example. Well, what is your probability of losing 6, 7, 8 trades in a row with a 50% win rate? You would say, I'm not sure what you'd say it is. It seems really low, but it's actually nearly 100% once you've taken enough trades. So I would just say that if you're sitting there trading over the course of, and this is with perfect execution on this system, and it has a probability of 50-50, there's a 100% chance as you take a series of trades that you're going to lose 6, 7, 8 trades in a row, let's say. And so if you're risking 5% per trade and you run into an 8 trade loss streak at some point, which you certainly almost inevitably will, that's a pretty big drawdown. And that's not even counting all the emotional factors that are going to come with the reality that you're hitting the inevitable 7 or 8 trade. It's just a mathematical certainty that you will. And so what I would say, but say you run into that big loss streak with risking 1%, well then you have an 8% drawdown, right? So Yeah, I don't know. I think 5% is pretty high, just based on the math of most systems and their assorted win rates. But so that's one way to answer it. And the other way is that if you're not an experienced trader that has their own data to base their risk off of, you should be risking 0%. And what I mean by that is this, and I've had these conversations with people. They say, hey, how much should I be risking? I'm going to scalp the 1 minute chart. Should I risk 2% of my account? And my answer would be like, you should probably risk nothing, because you don't know. If you don't know the answer and you've never scalped the 1 minute chart, why don't you build up your own systems and data on your ability to trade the 1 minute chart? And how could it make sense for you to base your risk based on some random person just saying they don't know anything about your trading? They don't say, oh, let me see your last 1,000 trades on the 1 minute chart. You know, you could take a few hundred trades pretty quickly, build up some data, paper trading or risking $1 or whatever you want to do. And that's what you should base your risk off of. Not just asking a random person, right? So I think generally, like, people will ask those risk questions, which is, how much should I risk? Is it okay if I risk 5%? Well, let's see your trading data. You should be basing it off your performance, not basing it off of your how much money you want to make, because you're probably not going to make any money if you're an inexperienced trader. So the less you risk, the better. So yeah, those would be the two answers, which is, if you have a small trading account, you shouldn't really risk more based on the size of your account, with the idea being, I just want to make more money, so I should risk more. And you shouldn't be risking anything if you're also an inexperienced trader. If anything, you should be risking much less than 1%. And so, like, let's just take the question to the extreme. Somebody could say, listen, I only have a $5,000 trading account, and my goal is to retire this month. And so it might sound great for you to, say, oh, only risk 1%. So in that case, you'd be risking $50, let's say, on a 10-hour trade, $50 to make $500. That would be a 10-hour trade with 1% risk. Or it could be you're risking 2%, and just double it. But they say, but that's never going to happen if I'm only risking 1%. I've done the math. I need to risk 50% of my account. I need to risk $2,500 to make $25,000. And then I need to risk 50% of that new balance. And it's like, well, the reason you're using risk management isn't because you don't want to make money. It's that that's just never going to work, right? And even if you get lucky 2 or 3 times taking on obscene amounts of risk, why would you stop doing it then? You're making lots of money, and eventually you're just going to blow up. And you'd be surprised how quickly you could grow a $5,000 account. I'm talking with a consistent system, risking 1 to 2% per trade. That can grow quickly. K-Nick says, I started with $14 and I'm up to $70, LOL. That's amazing. What I would really like to see more people do, and it just makes so much sense. Let's just say that I make a video and or I come into the 1 minute chart or even the 5-second chart, and I start scalping this. So let's just say I was scalping a short here, scalping along on the retest, and maybe I shorted this, and I've done videos like this. I've done 5-hour scalping live streams. And somebody says, oh, wow, that's amazing. I'm going to do that. And their thought is, I'm going to load up a bunch of money into a trading account, get on the 1 minute chart and just start putting tons of risk into the market before they've even ever tried it. And it just makes no sense. And whether you apply that to scalping or any kind of trading style or system, take some time and collect some of your own data. And yeah, hopefully that makes sense. I really like to encourage people to take their time with trading. Because just ask anyone who's had, if you're a new trader who's has, let's say 2 to 3 years in the market as a minimum, do they wish they had not risked, taken on a bunch of risk when they first started trading? I mean, there are very few people that are going to answer and be like, oh no, the more risk the better. Because the way you could look at it is, that's when you're at your most vulnerable. And when you're at your most vulnerable, you want to protect yourself as much as possible, because you just don't have the tools, knowledge, ability, or even understanding to really be justifying putting a lot of risk. But you can develop those things and you can learn them, and those are skills and that's knowledge that you can take with you throughout your life and keep adding to. Somebody says the IBIT data on EXO, is that a paid feed? Yeah, it's, I don't even remember the amount. I want to say it's maybe like $2,000 a year, $2,500 a year for the IBIT data feed. And that's not, by the way, me charging for that. That's just what I'm paying for it. So just because somebody did misunderstand that when I said it's, if you want that data, it's going to be a couple grand a year, and somebody commented that I'm charging $2,000 a year for this order flow data. And what I was really saying was that that's what you have to do. That's what it costs. That's what it costs me. I wouldn't read into it. Someone says, do you think we have reached the bottom for now? You seem so relaxed. I'm usually relaxed. I mean, I've been doing this for a long time. I've been live. I mean, I was live here with 3 longs going into this wick rejection, and I took a short here live, and I wasn't panicking or freaking out. I've been live for all-time lows. Been live as the market dumps 15% in a minute. I don't know. There's no reason to panic, right? What's the worst that can happen to me is I know exactly what I want to do, why and where I would execute a trade, and not that I know exactly what's going to happen, but if I get a trade trigger, I just take the trade and I accept that it could win or it could lose, and I've already predefined this, that whole both scenarios well before I'm executing the trade. So, you know, what's not to be relaxed about? We break up here, okay, well, my long holds, you do this, and maybe I'm taking the second setup, and I take it, and maybe it gets stopped out. Nothing I can really do about it. My job's just to execute my trades, not to worry about what happens to them, because there's no way for me to know what's going to happen to them. But we are kind of reaching this point in the live stream where I'd like to stay live just to maybe go over order flow as we maybe get this move down. But again, we could just range here for so long. Yeah, I mean, there's probably something to be said about just like quickly going live, although I've done that before too, at all-time highs. I think I did like, because I was looking for a push up into all-time highs. Super bullish order flow in here. It was long into here, but even here, new all-time highs, new all-time highs. But every time price was just about breaking out, we just range. And even here, we were like 0.07% away from all-time highs before we had a retracement. So I think this was like the very slight front run. I'm talking about our previous all-time high. Back in 2021. Yeah, this first front run of it was, I went live because it's like, yeah, we're probably going to be testing the all-time highs here. And you go live here and sit there for an hour and a half while price is 0.4% away from all-time highs. Somebody says, a lot of people come to trading for making money and freedom, but I've seen elite traders work longer hours than some CEOs. Can people have time freedom with trading and make good money? I mean, yeah, there's a lot of traders who just trade higher time frame ideas. I mean, most of your actual work as a trader is you do your analysis and executing your trades. The vast majority of the time, you're just letting trade ideas play out or become invalidated, right? Like, so for example, if I end up in a long here and I'm in a swing long and I don't want to trade any other time frames, well, I execute the long and I'm targeting 77K, maybe you take 15, 20 minutes a day to review the charts, what's going on. But regardless of if I'm at the charts all day, this is the trade, and this is what I'm looking for. But this is one thing I would say about, to go a little further on your question, which is when you are first starting out and all the things you have to learn and all the ways that you can improve to get to a point, you can, basically what I'm saying is you could build a system where you're trading around higher time frame ideas, more focused on systems that give you freedom and time if that's what you want. But to get there, your effort as a beginner, your focus as a beginner can't be how can I take as much time off as possible, because it's really hard to get to that point if you're not willing to put in a lot of work. So early on, if you want to progress quickly through your journey as a trader, that doesn't mean coming in and trading a lot and putting on a bunch of risk. You could do a lot of paper trading, but it does mean spending a lot of hours developing as a trader. But if you want to sit and scalp, there's traders who'll sit and scalp the low time frames all day for 12 hours straight. And those, if that's your style of trading, I'm not going to have a lot of free time. Or someone like me, I definitely do some low time frame scalping, but more so I'm looking to trade lower time frames. So for example, it's like the idea of taking the long here yesterday. I'm looking for this move down through this weekly candle low, but I'm still looking for opportunities to take a long off something like this into the middle of the channel, and shorting, longing this range here, was looking for the move up to 71K, but I'm not just finding myself in one long trading it up. I'll get on the charts every day and look for ideas to add into those long positions up to 71K. That takes a little bit more time commitment. That's trading multiple time frames. So you have the higher time frame idea, but you're looking to trade it into it multiple times. Or even this, I could be looking for this level, but I'm still willing to step in and take this trade, even if I'm still looking for this level, just on a different time frame. So but could you do well as a trader just trading the higher time frame ideas without stepping into some of those lower time frames? Certainly. Just be a swing trader. You know what? Someone says, what are your thoughts on the halving and people calling for 30 to 40% retrace? I don't know. I mean, I really don't have, I guess, like, I don't really have that many thoughts on what other people think. I have thoughts on what I think are nice ideas and probable ideas. I'm rarely, if ever, going to be changing my perspective just based on what other people's perspective is. I can have multiple ideas at once, multiple time frames. I know what invalidates my ideas. And personally, I'm looking for a move up towards, from here, if we can hold some of this up, towards 77K, and then a deeper retracement maybe into the 50K region. Until that idea is invalidated, it's my primary idea. I don't have to spend that much time thinking about all the other possible ideas. There are other ideas, but I'll deal with those when they present themselves. Okay, this is what I'm going to do. I'm going to wait for another 5 minutes through this hourly candle here and see if we can break down. And if we don't start breaking down, I'm going to end the live stream, and probably right after I do, something interesting will happen. But again, I would just say the reason that I would be willing to long this twice is I don't want to assume this wick's going to get taken. I think it looks nice, and we are grinding down into this level. It could also just be reasonable that instead of trading around the weekly candle, like if I wasn't in a position here with the plan, the preset and validation, and wasn't gonna be looking for something like this, just waiting for this descending structure to break seems pretty reasonable for longs. Either let the descending structure break, come and take these lows. Vegemite saying, what's your trade? I'm assuming you just tuned in, but really just looking for this region to get a nice reaction, hold up this weekly candle low, just get rid of some of these horizontals, and trade up to 77K. Understanding that we could come down into this level. This is really a region of liquidity. Seeing a little bit of local weakness, and if I can, I'd like to be live when we come and take these lows. We are grinding down into them, which is why I'm staying live. Seeing if we get something like this, but being open to something like that as a possibility. of looking at ETH as well. But I have my trade set up here. Either execute them or I don't. Would you guys rather be looking at the trading view chart or the order flow? I think the order flow would be more interesting for you guys to see on your screen. As we take these lows, if we take them. These are the lows we're looking at. I'm going to be zoomed in. Let's be looking at the delta here. The region and price here is kind of down to like 64,000, 64,500 on the delta on the IBIT chart. Come on. Yeah, I mean, it would be nice to get the clarity of running into this level now, so I'm not ending up sitting in a long and say, for example, even going to sleep tonight here and having to think about this level being tapped later. And it's so important to remember that these are lines on a chart, right? They don't have any magical powers. Again, a game of probabilities and not certainties. Price could just go straight through them. In which case, there's no long around this idea of running into this level and signs of strength. It's just a line on the chart. Wants some evidence that the line is relevant as price approaches the line. Somebody says spot buying as perps / shorts are closing. Well, that'd be good for this thesis. Now, again, how I may practically look to trade this, I think something like this, from just like a structure perspective, makes a lot of sense. we have this wick, we have this, but there's probably ideas of tighter setups here as well. Really just looking at order flow, the reaction, etc. But these, 36, 40 are setups, but these aren't something that I would ever, on a quick move like this, ever update as an idea, because, you're either a professional trader or you're not. You're not going to be able to think of more reasonable ideas. Oh, excuse me. The more reasonable ideas, you let the level play out. You might have that strong wick suck back up. Might come and retest the level. Just smaller, wider positions. The way to go. I've looked at IBIT chart already. Nothing that interesting happening here other than the fact that there hasn't been that much selling on this big gap down. I'd have to double check the rules. Somebody's asking, is it possible to have two flats, wave 2 and wave 4 on the macro count? I think there's no rule that it can't be. I'd have to double check. I think it's just a guideline that are typically you wouldn't see that. I don't think there's actually any rule specifically against it. But again, I'd have to double check. I will say that my memory certainly has failed me many times when it comes to all of the endless Elliott wave guidelines and rules. You can think you're oh yeah, I remember this. When you see the rule, you're oh, I did not remember that. All right. See, this is what I'm saying is it is so hard to. Somebody said do I expect a reaction or move in the next few minutes? It's so hard to say what's going to happen around the next few minutes. Trading around levels with invalidation. That's how I prefer to execute my trades. But even now, as this looks so eminent, just keep ranging. And for that reason, I'm going to say that if this candle, this specific candle in the next 2 minutes does not start breaking back below this candle, I'm probably going to end the live stream, because I'm not so convinced in the idea that that sweep is so imminent, and that we can't just end up ranging here for some time towards the New York Open. And this, it's not that it takes so much out of me, but boy oh boy, this is how I want to spend 2 hours of my day. Just sitting and watching. Oh, sorry, excuse me, nothing happening. And I've already been awake for 8 hours or something, and my day's just getting started. Do I believe price action is fractal? Yes, I think generally speaking it is. I think price behaves similarly on all time frames. I'm usually focused on perps here in terms of order flow. Almost exclusively. And I've started looking at the BlackRock ETF order flow. All right, we'll give it 44 seconds. It's got 44 seconds to come back below this candle. The live stream is ending. Oh, it might get there. Yeah, you'll find, I mean, someone says another trend line tap 3 times perfectly on the 1 minute chart. You'll find these low time frame trend lines are just so consistent. It's quite astonishing, actually, when you really start looking at these low time frame structures. I actually prefer low time frame trend lines on Bitcoin over high time frame trend lines as for scalping than I would for having these all the high time frame trending structures as high time frame ideas. Some really nice ascending, descending structures in here. All down here, just grinding on these low time frame structures. I think on a couple time frames. I think I mean, again, I'm trying to remember. I think this, just here, 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 and then we started shifting some of that trending structure a little bit, but can be really clean. But you go up to the 4 hours, not saying that the 4 hour trend lines are irrelevant, so to speak, but typically on the lower time frames, you'll start to see those really clean descending and ascending structures into bigger impulses. So they're nice to keep an eye on. This was a higher time frame ascending structure. We broke it down. Yeah. I'm going with one of two things, which is we're just going to range here and come take this low later, or not take it at all. This would be kind of interesting. So I'm going to end the live stream. I am long, so I'll just kind of wrap up my thought process here, which is I'm interested in this level down here, but I'm willing to have my long risk on around this huge high volume wick. I would have thought I would have maybe taken that stop. And my plan is simple. If we break down this local structure, I'm not getting back long without signs of strength. Yes, there might be some ideas I'm willing to trade closer to these lows depending on how this all forms, but generally I think but if I do, I might even be willing to take profit into a retest of this level if we reject. Generally the idea here would be reclaiming these lows as a sign of strength if we do break down. And what I mean by this is, you know, it's very common that when we're at a major level, I'll come down to the 1 minute time frames and I'll look to scalp myself into a bigger position, which is like, say we have a move like this. And we're ranging and we come in and we sweep this low and I execute some longs off of this. Well, there's enough room here, 1.5%, to where I can say, hey, if we just rip back through this level, I'm just going to carry this. I'm going to scalp into this structure. I'm going to carry this higher. But if we reject, then I'm just going to take profits off of these longs, and I can always add back on a reclaim. So I may end up in a bigger swing position from lower, willing just to scalp this, understanding this is my technical local resistance, for the chance that we just break out of this resistance. So, But anyways, all right, let's wrap it up. Probably this fourth touch here, not such a good idea in my view for a scalp short. Might still hold though, who knows? But might be looking for this liquidity to pop here. Either carry on, in which case I'm in a long, or I'll have to come back and reevaluate this.